need to do some kind of thing. So we are gonna go live soon.
And I should call you Bitcoin Libertarian.
You can call me that or Fernando. Fernando is my real name.
Perfect.
So let me do the adjustments so we can show this on the platform. I think it's okay. Let's go here. Let's go here. We're gonna be ready in few seconds. Yes, I think that we are live. Let me check if the audio is correct on X, because one day I did the streaming without audio. Let's see if everything is correct.
I know how it goes.
Excellent, excellent. We are live. Everything is running. So, hello, this is the Bitcoin Libertarian. Our guest today is Matthew Mežinskis, an independent researcher and podcaster specializing in global monetary system, central banking, and the intersection of traditional economics with Bitcoin. With a background in original economic research, he runs Porkopolis Economics, a platform dedicated to in-depth analysis of money supply metrics, military spending, sovereign wealth funds, and Bitcoin's role in the global financial landscape. By the way, one of my favorite YouTube channels. He produces regular video episodes and live streams that break down complex economic data, such as quarterly world-based money updates, where he ranks Bitcoin against fiat currencies and gold. He also hosts the Crypto Voices podcast, interviewing figures in the Bitcoin space and exploring qualitative aspects of economic conflicts and policies. His work emphasizes transparency in monetary data, critiquing central bank practices, and highlighting leverage in money supplies like M2, M1, M2, and M3. Through Porkopolis Economics, Matthew delivers educational content aimed at demystifying economics for audience interested in fiscal policy, inflation, and emerging digital assets. Today, we will talk about his research, the future of Bitcoin, and hyper-Bitcoinization. Matthew, welcome.
Fernando, thank you very much for having me. That's a very wonderful welcome. I appreciate it. I think you got everything there. So happy to be here. Happy to chat.
And happy to meet you after, as I told you, having seen many of your videos, and I have some questions so you can explain to our audience. But the first question that I have is, Matthew, how were you orange pilled?
How was what? Sorry?
How were you orange pilled?
Well, it was a long time ago now, actually, and it came in waves for me. So I've mentioned before, I was around when the Winklevi twins were buying. They were buying sub $10, $6 or so. I heard about it about the same, even a little bit before that. It was early 2011, but I wasn't buying. I was out here in Latvia. I was working, and I just didn't have enough technical people around me. There's no ChatGPT at the time, obviously. So it took me a lot of time, and I saw, over the next couple of years, the price boom and bust and boom and bust. And for me, it was not a stretch to understand the philosophical underpinnings of Bitcoin, because I really got into, hard monetary policy, fiat currencies versus gold, silver after the global financial crisis in 2008. So none of that was that hard. It was just the technical part was hard for me at the time to wrap my head around it. I was skeptical, thought it was something that, could easily be hacked or whatever. So yeah, it was pretty organic and just slowly for me. And then, during that Bitcoin winter, or crypto winter, as they call it, in 2013, 14, that's when I really started to look more. Started a podcast in 2017 with my friend, also Fernando, actually from Brazil. He's a very good Austrian economist in Brazil, Fernando Ulrich. So we did that for a few years. And we still have this podcast, Crypto Voices, but I'm doing it less frequently now with guests, talking about more security stuff now than more money supply. And so now I do these streams on my own on Twitter and on YouTube every day, or I try to do it every day at about 11 a.m. Riga time and 9 a.m. London time. So, and whatever that's 4 in the morning Argentina. But in Hong Kong, it'd be a bit later.
Yes, no, it's like it's not Argentina. It's in Hong Kong.
Yeah.
It's 4 p.m. because
Right.
again every day we are at the office and again with my business partner we talk about Bitcoin 24/7 because we are Bitcoiners and he is a very interested in the analytics. So I remember when I had my podcast with Giovanni Santostasi, the creator of the Bitcoin Power Law, he went so in deep into the power law and he discovered your stream. And since then, we are always talking and I say, oh, Ford, as I was telling you, started Porkopolis. And I read in your website that the Fernando, the Brazilian guy that is an occasionally speaker of the occasional collaborator of the show. And I see this because as an Austrian economist, for me happened the same with Bitcoin. It was a revelation. It was like, okay, this is the missing piece of the puzzle we need to make the Austrian economy work in the real world. And for me, again, it was difficult, the technical part. Do you think that now we need to teach more technical things to onboard the people, or we now need to focus more in the problem of the money? Talk about the problem of the money and show Bitcoin as a real solution.
Yeah. That's a long, potentially a long answer. A lot of people have a lot of opinions on that. I still remember a very early interview we did with Eric Voorhees, and he said, you can explain Bitcoin in a very methodical way, a technical way to a technical person, or a supply demand economic way to an economics person. But at the end of the day, and I think about this for myself, frankly, for a lot of people, where they really will, it will sort of grab their attention and make them think that this is something exciting. It is indeed the price. It is the price. And so the price, obviously the price, and as we know from economics, it's the cleanest, clearest signal you can get in the market for anything, right? That's why we need free markets. We don't need communism. I'm living here in the former Soviet Union. We hate to be called a former Soviet state because we were occupied illegally by the Soviets, but communism just doesn't work. Now we have this we have different forms of soft communism or techno-feudo communism all around the world, and it's even creeping in capitalist societies. So all of that Bitcoin, as you know, can help to solve in the long run. But I think as far as getting people adopted, getting people orange pilled, the most important thing is to show them how it can protect their wealth, their family's wealth, protect their future, their financial future. And then I think from there, you can start to slowly build out a case that, okay, this is sound money. This is something that really could change the financial system. And then people just build. In Bitcoin, you can build without permission. That's the wonderful thing. So, we're seeing from 2017, the Lightning Network started to bloom, and now we have lots of layer 2s, layer 3s. We have Chalmy and eCash mints, Fedimint, Cashew. We have different ideas about how to trade value, and it's not going to stop. This is, I think, as far as the really extreme, and we can show charts on this if you want, but as far as the really extreme returns, which the power law or the power curve can help guide us, those price, that volatility, which equals those really high returns, probably going to continue to be more tempered and lower as time goes on and as Bitcoin becomes adopted. Having said that, the possible adoption that is going to come is still enormous. And I think if you're looking at Bitcoin and you think it's too late or it's not interesting, that's when you need to think twice. Look at the charts. Look at some of the charts I'm putting out, where I'm trying to show you that it's the growth is still enormous compared to the financial system, and there's just enormous potential of where we're going to go.
Yes, one of the charts that I was looking in the one of your streams of last week was how the CAGR was reducing when the time was passing, even though that is reducing, is super high. It's super high compared with other investment. And with my friend, we were saying that is the price that you pay for being late. What the price that you pay is the CAGR going down. So, and how do you build the power laws, and what interesting power laws you can show us today?
Sure. Okay. Well, I can share my screen, which I
Yes.
will do right here, and we'll come back to this one. Actually, we'll go back to this one. So I've been showing this one a lot.
Yeah. Let's find some clickbait title to call the people with the price first. Because
well, I can show you when the power law will predict a million. I can show you what the power law has predicted in the past for today, and so you can look at that comparison. I can show you lots of things. I always want to be clear because there's been a lot of misinformation, and I'm totally on Giovanni's page, by the way, that this is one of the most sound models to model Bitcoin. And like you said, Giovanni, I think he first wrote about it, Bitcoin in Time, on Reddit in like 2017, September, October. I posted it on Twitter in December 2018. I didn't know who Giovanni was until like a year ago, but yeah, Giovanni's really hardcore with the data. He's really good, I think, explaining a lot of this stuff. But the point, and if you compare like what we've done compared to, say, Plan B's stock to flow idea, stock to flow itself is a power law. It's running on a power law. But there's a couple issues with the way that he's done it. Most importantly, from an economics perspective, is he's trying to compare gold and silver and platinum and palladium in his old models with the stock to flow of Bitcoins. And as people should know, Bitcoin's emission decreases by half every 4 years. That is, the stock to flow will increase. It will double every 4 years. So the idea in general, of course, is true. As Bitcoin stock to flow increases, the value of Bitcoin will increase. But stock to flow itself, the metric is not it's not really scale invariant because it has these stair steps. So you're always going to be lagging or overshooting in the idea of it. If you look at the power law, and just to describe what the power law basically is, it's if you look at it, this chart with Bitcoin's price over time, we have the y-axis here is price, all right? And then we have the x-axis is time. Now, I'm showing dates just for convenience, right back to the Genesis block. But really what you should be thinking is January 3rd, 2009 here is 1. January 4th is 2, as we go on. And now we're about 6,000 days into the life of Bitcoin right here in September 2025. That's what you should be thinking when you see a power law or a chart like this. And then once you run the numbers, once you do the math, I'll just even take off all these rainbows just to make it crystal clear. You'll get a curve, which looks like this, and it's a beautiful curve. And it's, as you see here, it has this concave down function. So it's the bulge is pointing up. And if Bitcoin was an exponentially growing asset, you would not see this. Every other asset in the world is exponentially growing, i.e. gold. Here's gold going back to 1971. All right, it's a good, simple gold price. Gold is ripping in the last 2 years. People probably know. Peter Schiff's happy, even though he's ruined his clients on Bitcoin for sure. And we can draw a trend line through it. It's not as good of a fit, but it's clearly an exponential trend. Exponential trends are straight lines on log scales. So as you see here, that's clearly an exponential trend for gold. We're well above trend right now. How high can we go? That's another discussion. I can show you charts there too, but let's not get ahead of ourselves. The point is, gold is an exponential trend, and actually everything in the financial markets is exponential. Stocks, bonds, literally everything. Bitcoin is a very unique asset because when you look at the price over time, going back to the Genesis block, you have this very interesting, scaled, sustainable growth, and it's not exponential. It's just very important to understand that it's not exponential. And that has a lot of implications for how Bitcoin can grow in the future. All right. Exponential. One way I like to try to explain this is if you think about, and we can look at the numbers and the FOMO in a second. But one thing I try to explain, or one example of why exponential curves can be kind of unstable and why can we have this boom bust cycle. Of course, we have the economics. We can talk about central banking and monopoly and fiat. All of those play a part. But the reason we have exponential growth in the core financial system is because that's just how interest works. That's how credit works. That's how the banking system works. If you're going to have interest on a project, if you're going to take a loan, or if you're going to have investors and you're going to pay them interest, that itself is an exponential function. So you will always, always, always get this straight line on log scale. The interesting thing, though, about Bitcoin, well, actually, let me stick with exponential here. So, again, the S&P 500 would look like a straight line. Everything would look like a straight line. But the problem with exponential is it can quickly go off the rails. So, for example, if I am paying rent on my house, and I'm just using absurd numbers, but let's say I'm paying rent on my house at 10% increases every year, right? But my salary is only going up 5%. Okay, obviously this is a quite extreme difference, but my rent is basically going to double in 7 years, 7.2 years to be exact, rule of 72. And my salary will only double, obviously, something like 7.2 years after that. So you quickly, that's kind of an absurd example, but you quickly get to this scenario where, we're moving in all these different vectors of exponential, but if you're not keeping up with the costs, with the inflation, then you really, really quickly could fall off that path. And then this is typically, in my view, one of the things that exacerbates crises. Yes, it has to do with the money supply. Yes, it has to do with economics and bad government management and overspending and all that. But it actually is the simple math that makes things sort of explode in an exponential world. So the cool thing about Bitcoin, all of a sudden, is we have this asset like never before. It's not growing that way. It's not growing that way. And so again, before we get to the numbers, how is it growing? What is another way where we could explain doubling time, or we explain that looking at this curve? Again, you got to run the math to get to these numbers, but basically, the price of Bitcoin doubles proportionately to how long Bitcoin has been around. That's what the power curve says. So the answer, the number that this whole curve has come to right now is about 12.7%. But that's not 12.7% per year. It's 12.7% increase in the life of Bitcoin. So back here in the early days when Bitcoin was only around for, let's say this was like 400, 500 days, whatever, right? 500 days. Okay. A 12.7% increase in the life of Bitcoin would be 60 days. All right. Only 60 days. So it only takes 60 days for this curve to double. Okay. As we move forward, though, into time and Bitcoin, gets more adoption, maturity, hash rate grows, addresses grow, the network becomes more adopted. That 12.7% remains constant. That is actually a constant fixed number in power curves, but the days to double will increase. So now, as I mentioned, we're something like 6,000 days instead of 600 days into Bitcoin's life, right? We're 6,000 days. So what is 12.7%, it's something like 700 days, a little over 700 days to double. So now we have to wait another 2 years roughly to double at the moment. So that in a nutshell is what the power curve explains when you look at it over Bitcoin's price. That's kind of, in my view, the simplest way to explain it. I can stop there if you have any further questions about that.
No, it's super clear. I want to add two things. The first that you don't mention, not for me, for the audience, I think that the vertical axis is logarithmic. The scale is logarithmic, right?
Yes.
We are seeing the logarithm of the function. And the second thing that is really interesting, we do a couple of power laws, because we do our own analysis. My business partners does the analysis, and I try to check the data. And we discover that there is one stock that kindly follows a power law with around 80% of accuracy, and it's Meta. And we were seeing that this is because, and there is a big, it's clearly correlated with the power law, except a big crash when the metaverse failed and the stock went down.
Yeah.
But now the stock was up. And that reminds me, when we were talking about this with Giovanni, that he was saying that Bitcoin is a social network. And that's why for me it was super crazy. Like, oh, Meta follows not the same path, but it's the most accurate power law we found compared to all the other stocks. Was crazy.
Yeah, that's very interesting. Have you measured it from the beginning of the stock?
I should ask. I think so. I should ask the numbers to my friend on Monday. But I think so. We have the numbers. Let me double check. But yes.
I was just
think it's from the beginning.
Yeah, I was just checking my files. I know I've done one. My back end gets some clustered sometimes. I know I've done one with Meta market cap versus Bitcoin market cap, running Meta in exponential. I didn't try measuring it in power just because I assume every stock runs in it. But that's interesting that you found that. And like you said, it makes perfect sense that the price might do it because it is a social network. It's a very centralized social network, which can make huge F-ups like the metaverse, which seems ridiculous still. But
that's sorry for that. That's what we said. Even though it's kind of power law, I should invest in that, but my principles don't make me invest in Meta. So that's the point.
That's very interesting. I'll definitely run that both on power and exponential in the future. That's interesting that you found that. Makes sense though. So log linear. If we had this in log, by the way, and my chart engine is just not good enough on the fly, but this would become a straight line. Okay, so with exponentials, when you're on log linear, and it doesn't matter the base, right? This base is somewhat like base 2, but not really. That's 2 and change. Doesn't matter the base of the log on the y-axis. It will always be a straight line, right? But with a power on just log linear, you get this sort of nice, gentle slope. So what you should be thinking is, wow, well, this actually looks pretty sustainable. This doesn't look unsustainable like here, where you might have big booms and then crashes and booms and crashes. We have, of course, everybody knows we do have booms and busts in Bitcoin too, but the curve is adopting to Bitcoin's heaviness, right, as it grows. And so it's not just a fixed doubling every 7 years. It's a slower proportional growth. That's the idea. So anyway, that's the math behind there. This is the curve itself. It depends on all the data you have. I got different data slightly than some other people, but if you zoom in, we're slightly below the curve the last week. All right, week and a half. So you can see here, the current power trend is 112,800, 113,000, something like that. and we've just been dipping below it. So again, a lot of people freaking out, a lot of people thinking it's all over for Bitcoin. I'm just looking at this as we're right on trend, something that's very beautiful and nice. It doesn't mean that we might not fall down. Who knows? No one can predict the future. We might fall down, but this is where you start to build out the trend lines, and then we can start to understand, okay, when we're in bulls and bears. So just really quickly, I'll build them out. These are the maxes based on the multiple above or under trend. Okay, so we put in a max right there in 2011. We went literally 7.8x the trend. The trend was $2. This is not the trend at the time, by the way. I should draw it in, but just imagine it's somewhere between here. $2. We went 7.8x the trend in 2011. We also basically did that again here in 2013, November. All right. So the trend was, I don't know exactly at the time, but 7.8 exit was the price, $1,119. And then we never hit it again. And I honestly don't think we're going to hit it again unless there's some major global shifting event. But I just, it's hard for me to imagine based on the statistics of it all. So if you look at the 10th and the 90th, they're already well inside. They form a channel well inside. All right. So look at the difference there, just as an example here in, let's say, 2021. The 90th percentile was $40,000 Bitcoin. The 100th, if we had gone back to those early days and as far as price movement, would have been 164,000 in 2021. So it's very extreme. Right now, the 90th is $225,000 Bitcoin. The 100th is 883,000. It's not going to happen again on a trend. I don't believe. So anyway, I'll take this off, the 100th and the 0th. We have a nice channel here. Put in the 20th, 30th, 40th, 50th. These are all levels that are below the trend. The 60th as well. These are all below the trend line, by the way, the current trend. And so this is where, literally it says the number 6 is 60%. Actually, 60% of the time, 65%, something like that, Bitcoin is below the trend. That's what it has worked out to be. So it's been actually below it. That's just the math. That's the statistics of it all. And that's we're not as low as the 60th right now, but on the 70th, I think it's going to be above trend. Yeah. We're probably somewhere in the 64th, I don't know, 64th percentile right now. So again, it's totally normal. 2/3 of the time we've been around these levels. This is where it sort of, it's close to where the mode is as well. This is where the data sort of populates around. And so it's totally normal. And as we know, we have our 4-year cycles in Bitcoin. Okay. So again, this is like basic stuff. It presumes, all right, 18 months after halvings, we boom in end 2013 and 2017. And then in 2021, we had this double top. So who knows? Everybody's very excited now to see what's going to happen here. But if we just use this analysis and we assume that we will have a boom here by the end of 2025, I'm not saying that there will be, then we start to get into the upper echelons, the exciting numbers. And again, just in broad strokes, getting above the 90th percentile is pretty hard, pretty rare. That's 250K. So there's only one more band that's not on this chart. The 80th percentile. What's the 80th percentile by the end of the year? That's 168K. So both of those, I think, are actually very good numbers to show if we will invalidate these prior bumps, these prior huge booms. So we take everything off above the, except for the 80th and the 90th. Now let's look back in time. Obviously, 2011 had its own boom before the first Mt. Gox hacking, but or empty Gox, as we should say. We had a double top actually as well in 2013. We clearly hit the 80th and the 90th for a year even for the 80th. Okay. 2017, how long were we above the 80th? It was from May. First hit it in May 2017, dipped back low. But really, if you want to count everything from May to August 2018, all right, on the way up and on the way down. It's a long time, but also, if this is not a trading chart. I don't trade from this. I'm just sort of showing people the idea. So you can be over a year above the 80th. And then in 2021, how long above the 80th, number 8 there? We went in December 2020, and we were out January 2022, basically December 2021. So a year. In that time period, there's a lot of Malox moments. There's a lot of FUD.
Yes.
There's a lot of new proclamations from governments around the world as they try to get a handle on this. Everybody's freaking out. But this is how it looks. And what I try to do every day on my stream and just tell people as well, like I do this for my own sanity, right? I mean, these statistics are really strong. I mean, there's just a lot of data points here. So if you're sort of banking on buying Bitcoin and then hyper Bitcoinization next week, next month, even next year, I would challenge you to temper that excitement, spend time with your family, enjoy life. But there are a lot of good reasons still to be very excited about these short-term booms. And of course, markets can be irrational. Never financial advice, do what you need to do. But I think that if you just look at this chart alone, there's nothing that says we definitely will not boom like we have in prior cycles. It does not mean I'm predicting that we will for sure boom. I'm just saying it's happened every time the last 4 years. We are really coming to crunch time here. Okay, as we move into, everybody knows it. Everybody's worried about it. Everybody's thinking about it. Maybe, we're in the world now with so much mainstream play in Bitcoin that we really might fake out this 4-year boom bust cycle. It hasn't even arrived yet, so I'm not going to say it's invalidated. But I would say something to me that would invalidate that is if we like consistently stay below this number 8. For sure number 9, but I would say even the number 8. Because then it would be like, all right, we've really smoothed out, these tops with, sandpaper or something. But until we've done that, I don't really see the fuss about it. I just think we should still maybe expect it's possible to happen.
Yes, I think that what I noticed, and I was checking also in the graphics that we have, is that now seems that the trend is like mostly like next to the
resistance
to the black one. So I think I don't know if you think that Bitcoin can still have these crazy movements, or now that the adoption is much bigger. Because if we think in 2021 was not so far ago, but at that time there were no Bitcoin treasury companies. Now with all the adoption that is coming and all these new movements, do you think that these spikes up and down are less possible or less probable than before?
Yeah, great question. Somewhat of a nuanced answer. Let me try to parse through it. The first thing is, again, what does the power law say? The power law is scale invariant. So at any point in time, the slope is going to be this idea of expanding, doubling the price every 12.7% increase in days. It doesn't matter where you pick on the trend, that will happen. Okay, so if that idea is still correct, and I believe that it is because Bitcoin's a network, this is how networks typically grow. I didn't say that, by the way. This is actually how a lot of this is the relationship that networks have when they grow, as you kind of mentioned with Facebook. So I don't, there's nothing here still that says we're just too heavy to cut off these booms. But having said that, for sure, and this is where we'll go now into this next level of my percentiles, is this is just the top 90. So now it's 90th to the 100th. Let's look at the prior cycles and see where we were with price with the top 90th. So like this was each from 10 to 100, 0 to 100 basically. This is now 90 to 100. So we still have this 100th percentile. You can see it's very rich. Look at the difference here in 2011 June between the 100th percentile and the 99th. So the 100th percentile was $35, 99th is $21. Really, really different. And Bitcoin hitting 35 was like super high. Same thing happened in 2013, right? Actually didn't set it, but we're right below it. So this 7.7 or 7.6x, whatever it is. The trend, $1,171. The trend itself is only 95, but then you go to the 99th percentile, it's only 693. So the point is, take off the 100th. I think it's very rare. Now let's see what happened in 2013. The main boom, we hit the 99th. In 2017, the main boom, we hit the 99th for a matter of like weeks, right? Right. Remember, I said it was a year before we went above the 80th, but above the 99th, it's a matter of weeks, days, let's say. 2021, we did not hit the 99th. So in my opinion, like you said, I think it's a good point to temper our expectations. I don't think the 99th is going to happen. I don't think the 98th is going to happen. 97th. Now it starts to be judgment calls, right? So the 96th percentile did occur in 2021. Of course, it occurred in the prior cycles as well because we hit even the 99th or the 100th. So this is where I think we are. So if we just say, now, you could also say, well, this is even too high because it's going to be lower this cycle. Possible. But let's just leave it on because we did hit it, right, for a matter of weeks to months, in and out of it. All right. We did hit this 96th percentile, which is 2.8x the trend, basically 3x the trend. All right. Now let's look where we are today. Price again is, when I pulled it in the model, 111,000. Trend 112,000. Let's go out to the end of the year, just, kind of caveman style, I'm not doing any technical analysis, just December 30th, trend will be 125K. The 90th percentile, pretty rare, but always happened before, 2x, 250K. The 96th percentile, which has always happened before, but might not happen this time, 2.8x, 350K. So that's why I think if you want to just very, very simple talk about 2 to 3x the trend by the end of the year, that's 250K to 375K. Probably pretty unlikely on the upper end of that, but we've hit it every time before. I think it's nice to just sort of, you can look at all the technical analysis you want, but we have this statistics. We know that Bitcoin booms and gets people's excitement in the fall, which is 18 months after the halving. Let's see if it happens again. It might not, but again, why discount it if it hasn't not happened yet?
I think that probably can happen. Of course, I'm super bullish, and I follow Samson Mao that he says that can happen 1 million. And my friend on the office, he said, "Look at this. This is mathematics. The other is astrology." So
Right.
again, I think that I cannot understand why we are in the extreme fear. We are in like neutral or trending to fear. And I think that is because people last year was over-expected. Probably people was thinking that when we reach 100K and when Trump in the administration with the strategic reserve, at that time we are going to be now at 1 million. And most of the people who follow, if you follow his YouTube and you enter to YouTube and you search for Bitcoin and you see all these thumbnails, Bitcoin is about to explode in red, and people following this trend analysis, the technical analysis and all this stuff, and people were waiting for higher values. But again, as you were showing in the data, is that we are good. Bitcoin is good. And again, we are going to reach higher levels for sure. But when are we going to be able to buy the Lambo? When Bitcoin is going to go to 1 million? Because I'm waiting for that day, not to buy a Lambo, but to be podcasting around the world.
Yeah. Good question. Well, just for fun, as you can see here, the nice thing about regressions are, whether it's exponential or power, you can project out as time goes forward. So we have the same idea where every additional 12.7% of Bitcoin's life, we double. That's how the trend will go. And then we can do these trend lines, these percentiles as well. So let's keep up to the 2 to 3x the trend on here as well, just for fun. Well, let's just roll it out. Let's just roll it out. Okay, so Also keep in mind that the next 4-year cycle, if it still is going on, would be 2029 December. So as we roll out here, we're getting the power curve all the way to 2029 year end. All right. The power curve itself at the end of 2029, which would be the next 4-year cycle, 422,000. And the FOMO zones are above 1 million. Okay, so not 2x the trend. That's only 843, but you know, from the 94th percentile, 2.5x the trend. We could technically, I think, feasibly do it again. The 4-year cycle from now. And people ask me a lot. You know, they're like, why do you really think the 4-year cycle is such a big deal? You know, there's just so much. The amount of Bitcoins that come out every, right now compared to 10 years ago are so little. Why would it really affect? And again, my answer is always the same. I mean, don't question it until it's invalidated. It hasn't been invalidated yet. So that's a possible point. In December 29, we could bump above it based on, what we've done in all the prior 4-year cycles. And then if we just look at the trend itself, go out to 2030. This is one I've been focusing on a lot, is the year end 2030. Something like 560,000. That's the trend itself there. I think that's pretty solid, actually. And I'll show you another chart, which is really cool in a second regarding that. But anyway, let's keep going. I actually think this gets cut off before a million. No, it doesn't. Okay, good. I took it all the way. This is actually 10,000 days of Bitcoin right around here. I think it's here. Anyway, a million will occur on the power trend May 2033. So
guys, the suggestion is don't quit your job now. Keep stacking. And by the way, again, the other day I did the math when I was streaming in Spanish, that you can. It's not that you are buying a lottery ticket. This is real math. And this is something that, of course, this is no financial advice. We don't predict the future, but it's something that can happen. If you do DCA every month with few money, like 20, 50, 100, the amount of money that you can afford to put every month, if you accumulate and you use the magic of the compounded interest, probably in 10, 20, 30 years, you will have a huge amount of money where you can retire on Bitcoin. But
absolutely,
good things take time. In the meantime, enjoy the ride, enjoy your family, travel, and enjoy and study Bitcoin. That is something amazing.
Yeah, I completely agree with that sentiment, 100%. And the Sminston with, have you followed him on Twitter? His username's first Sminston_with. He has a very nice table that he puts out, a Bitcoin retirement calculator. And based on this power curve, based on how it goes, if you want to retire, say now, or if you want to retire 5 years from now, how old you are. And it's actually very nice. He adjusts, he does like 7%, I think, expense inflation, the power curve, everything else. And I think the max amount of Bitcoin that you need to get to, no matter your age, is something like 9 on that chart. And of course, it can be less the older you are, because it goes till 100, but it goes to 100 years old. But yeah, it's a very interesting analytical sort of procedure, thought analysis. If you're thinking about retiring with Bitcoin, which obviously we would recommend, but never financial advice. So
of course.
So yeah, this is how I look at it. Like you said, it's math. It's not trendline analysis. It's not technical analysis. It is regressions. And the way that it replicates, the way that it sort of continues to be around this trend, gives me a lot of confidence that this is in fact what's happening with Bitcoin. So when I see the trend growing like this, yes, I see booms and busts and FOMO and all the rest, but I also see, via the price, in my view, it's like adoption. This is adoption of Bitcoin. And so that's what I think is happening. One other cool one. So I just started to show this week. I'll try to do this one quickly, but so this is a monthly frequency. It's the same chart just until today. Here is what I was talking about, the evolution of the trend. So actually, Bitcoin was really moving fast in the early days, right? We didn't really know this is sort of the all-time trend. But you can imagine like a trend line every day, because every day's worth of data paints a new trend. We're like really moving high here. And then we really slowed down after this sort of like puking after the Mt. Gox hacking. Then we raised again. Then we slowed down from the crypto winter. And then really from about the end of 2016, if you look at where the dotted line moves here, notice how it looks very similar to the all-time trend. Just a few variations during the bulls and then being pulled down from the bears. So the point is, it looks pretty smooth from 2016. Now let's look at the evolution of what the trend would have said today's price would be at that time with no other data until at that time. Okay, that's this level. So like I said, imagine from 2016, this settles down. So it's really, the data is not as reliable here in the early days when we're trying to figure it out. I first posted about it, and Giovanni as well, in the end of 2018 as far as price in time. Giovanni was doing some other things with power curves, I think, earlier. But if you look at number 2 now, this is what the curve would predict the price to be today in September 6th, 2025 at the time. So back in August 2016, it is saying that based on the data that we've seen, based on the trend, let's just take the evolution off, just kind of sort of, let's go back. What was I? August 2016. The price is only $572. It's coming down from a big top in 2013. We've gone through this brutal, crypto winter. Still, we're in it basically, and it's projecting the price of Bitcoin all the way out in 2025 to be 145K. That's not that far off from where we actually are.
Well,
so
that's the curve that's what we are watching on the weekend, on this week, and we were mind blowing because in 2016 you will say that today was going to be 145, and it's 110. It's mind blowing when price was 672.
Yep, 572, even less. Yeah, 572,000. So it's So I'll put this on linear so you can see it is variable, obviously. I mean, so anyway, we go down, we get really close, by the way. Look at this. In January 2017, it was predicting 114,000 today based on, the Bitcoin price was under $1,000 at the time. March 2017, it was predicting $108,000 today. 8 years away, basically 8-9 years away. And then, of course, it pulls back up from these bulls. It gets more excited, right? Then comes back down. But as we've gone, you can just look at the number there, number 2. A little bit higher, actually, than the trend. Typically, 120, 130, 140. Now coming down, down, down. And this will actually meet the trend today, 112,000. But the overall point should be clear. Like, this is not a deviation that is sort of mind-blowingly wrong. This is really an interesting fit. And again, I've been charting stuff for 20 years now. I've been doing that, as part of my job, and consulted with a lot of investors, do a lot of trend line analysis and pro formas and spreadsheets. I mean, when I use the word prediction, it's statistical. I'm not saying we know the future, but the way that this curve has sort of shaken out, the way that it has evolved, it's just unbelievably accurate. And as we can see, of course, in the last year, we're literally right on trend. So this number 2, no matter, if you go back all the way to 2016 or somewhere else, we're going to be, 100,000 plus in a recommendation to where we would be today on September 6, 2025. Really amazing. So now let's put in the evolution of that 2030 projection. And I'll just go back to here to show you exactly what it was. All right. So here is the 2030. Let's take all the other, just so you know exactly what I'm looking at. Same curve, same idea, same math. December 31st, 2030 is like wait, sorry. Why am I missing? There we go. It's gonna be something like $560,000 Bitcoin. That's where we're at right now. So let's look at how that was looking back in the day. 2016. Let's take off number one, just so you know exactly what I'm looking at. Starts to look pretty close to today's projection around here. Again, end 2016, 570, 575, 520, 530, 560. Now it goes up because of the bull, 700, 600, almost 800,000. But then it comes back down from the next bear. It comes back up 600,000, 700,000. So this one's more volatile, but somewhere high 500,000s, low 600,000 seems to be, the trend. Now, let me put this on linear just to show you how volatile it seems on linear, right? So I'm going to take the log off. Here's linear. All right. And I'm capping this at $1 million. So again, it is really volatile at the beginning. But still, if you look at like really what this thing settled into by the end of 2016, you're looking at the projection of the price today. All right, so back in the day here, 2012, we just didn't have a lot of data. Bitcoin's $12. It's projecting $349,000 today. It's wrong.
Yes.
But we're off that trend. It's finding its base. But it seemed to have found it is the point at end 2016. And I think even the lowest, which I already forgot now, I think it's May 105.3. Yeah, I think it's May.
Oh, wow.
So this is the lowest it's ever projected. Back when Bitcoin was $2,300, the today price, September 6, 2025, it's projecting 105,000.
It's mind blowing because, but that day, most of the people don't know about Bitcoin. Was not mainstream like today. At the time, I knew about Bitcoin at that time, but there was not so content online. So I didn't understand at that time. I gambled my Bitcoin and otherwise I would be retired. But at that time, I want to point that Saylor was saying that Bitcoin was a scam.
Yeah.
So imagine the power of these numbers that is like the prehistoric of Bitcoin. It's like, I don't know if it's probably in the 1500, like 500 years ago, someone has predicted that was going to be a tennis player called Roger Federer that was going to be the best ever, and nobody knew what even was tennis. So that's amazing. That's before nobody was taking in consideration that today we're going to have the Bitcoin treasury companies, the government trying to establish a Federal Reserve, and the price was mostly exactly the price we have today. It's amazing. It's incredible.
Yeah, it really is. And then again, it's not a crime to update our numbers, to update our information. So we're still in early days here. So you notice that this gets excited again once we're going through now the 2017 bull. And into 2018, we still hold the high prices. So, compared to the past, Bitcoin was literally hundreds of dollars a year before. And then 2 years before we get to 2018, we're now tens of thousands of dollars. So you see this number jumps up to 150, 160. It's thinking, okay, now it's going to come back down. Yeah, but here's the thing. Yeah, I expect this again. So we've been extremely smooth here, right on trend. There's two ways to look at this. The first is, okay, we're right on trend. We're going to stick to trend. I hear that a lot. I'm sure you've heard it a lot. Ask those people if they know what the power curve is and if they know the trend. I think the answer is probably they don't. And again, to me, so again, the power curve is completely different than an exponential curve. The dynamics of it are just completely different. So to me, when I hear people say, "Oh, we're not going to have these huge booms, these huge bears anymore," it's possible, but I don't think their assumption in their head is anchored to the power curve. It's anchored to an exponential curve, which is wrong anyway. It's way wrong. It's not what Bitcoin does. So that's the first thing. Second thing is, again, why why run yourself dizzy with all these, FOMO YouTube videos or whatever that people are showing about the Bitcoin's going to explode or it's going to implode when we've clearly had every 4 years big booms that pulls this number higher in all levels, no matter what you look at it. And maybe that could happen again. I think, again, is my money banking on that happens again? Yeah, I'm usually pretty long Bitcoin, but that's the way that I would try to sort through a lot of the FUD and the FOMO.
It's incredible. It's amazing because when you see the math, first of all, you see that I will tell the people when you see the math, really that you are not going to invest 100 US today and will become millionaire next year, because it's not going to happen. This crazy growth of Bitcoin. On the other side, the most probable thing is that is the safest investment that we have today. To keep your money, to keep the power, the purchase power of your money, even though now is boring, seems to be boring. So the lesson that we learn from here is that now you're not going to get rich investing $100 per now and next year, but if you DCA and you follow the power law, you can see that you can retire on Bitcoin. You have and you are not going to lose the purchasing power. Of course, Bitcoin can go to zero, can go to 50,000 to 20,000. But in my opinion, is if this happens, is because the president of the United States is briefing a press conference saying that an asteroid is going to crash the Earth. So Bitcoin is secondary at that time.
Yeah.
And the power law shows it. Again, it's amazing, all this data.
Yeah, it really is. It's a good way to just sort of ground yourself. And again, if you're interested in more, I'm doing this mostly every weekdays, not every day, 'cause traveling a lot and stuff. And here's another good one I can show you. This is where we actually predict out the market caps. So let me take off some things here. Here's the BTC market cap. All right. We're at year end August, 2.1 trillion, and then it starts extending out on the power curve. Okay. One thing I haven't talked about, but it's here, is this is the global monetary base. I also do this exhibit every quarter. So the top 5 currencies in the world, and also the next 45 is in the light blue here, the next 45 currencies. But the top 5 are here. They make up 80%, as you can see from that line, the dotted black line. And before the old 2020 madness, we were at a monetary base which was pretty stable around $20 trillion. And then we pumped in 10 trillion, or they pumped in 10 trillion into the system. Now we're coming off of that very jaggedly and slowly. And keep in mind, this is in dollar terms. So you need to think like this is literally euros, Argentine pesos, Hong Kong dollars are in here. All the main currencies are in here, and some not so main ones. So we've been coming down, but very slowly. And then, a lot of central banks are kind of actually quite easy right now, except for the dollar. This is what Trump wants. But if you look, the total now is 27 trillion. So we came down from 30. We went as low as 20. Let me actually find it for you. Where was the lowest bottom? 25.5. And now we're already back up to 27. So it's been jagged. They've really been trying to cool off all the money printing that they did in the 2020 and 2021 period. But I think that this is probably ripe for a breakout. I can show you other trend lines that we're very abnormally low actually compared to all the prior trends in exponential. But anyway, let's put this back here now on this chart, and let's put it on log scale. Okay, so this is the same metric that I just showed you, but on log scale. So notice how, again, exponential growth, because it's a straight line across. I mean, it can be slanted, but, and then because Bitcoin has such huge growth, you know, Bitcoin kind of dominates this. So this almost looks like it's flat, but number 4 is increasing. And here we are, you see we're way below trend. So we're at, like I said here, there's the 27. This is actually just dollar-based adjustments. You know, this is currency exchange, basically, the last 2 months. It still uses roughly the same values that I had at each quarter. I only update this once a quarter because it takes a lot of time. But anyway, you see the monetary base there, 26 and change right now with currency fluctuations. If we were on trend, it'd be 33.9 right now. So we're way below trend. All right. So I do think we'll go back to that trend. But anyway, we can just extend out based on regression analysis. This is exponential growth for base money, power growth for Bitcoin. When will it cross? There you go. May 2041. $110,000. All right.
So this is the graphic that shows that day is going to happen, the hyper Bitcoinization.
It's possible. It's possible. I'm not quite sure. I think it'll be I do think it'll probably be a gradually then suddenly type of event. But that gradually, I think personally, is a lot longer than most people think. Let me pull up another chart. I know you're seeing the same chart, but I'm going to pull one up really quick. And I'll show you. Okay, but anyway, we'll go back to this one. Let's throw in gold as well. So you see gold now? We'll pass that quicker. Gold is actually screaming, as you can see. Okay, zooming in. August 2025, gold cap, something like 20.5 trillion. That's a little over 6 billion ounces of gold worldwide that's been mined throughout humanity, 20.5 trillion. So that's also in this chart. When could we pass that? It's going to be a little bit sooner. Looks like we'll pass gold in the next 8 years or so, if we keep on the same power trend, which I do think that we will. So first gold, then fiat money. But then back to your question of hyper Bitcoinization. Let me put on this chart. Okay. This is Fedwire versus the Bitcoin network. All right. And I'm going to, how do I want to do this? I'm going to take this off. So this is Fedwire. Fedwire is basically the analog to Bitcoin. A lot of people don't, when they talk about Bitcoin, they don't really understand, what does the actual, an on-chain UTXO represent. It's really not a credit card transaction. People have been arguing about that for years. Like, can you buy coffee with Bitcoin? It's just not. If you look first at the fiat system, core of the fiat system right now, it's not gold. It used to be gold, but now it's just it's this base money that I talked about. It's this 30 trillion. Right? It's just a ledger entry. That's nothing. Yes. They printed ex nihilo. It's nothing. There's paper and coins, and there's a digital reserve that each bank has with the central bank, which they clear with other banks, which is called the master account. Those three things, coins, notes, and the master account, are what makes up that 27 trillion. Okay. And by the way, 70% of that is the master account. So it's like it's digital. Here is how that 70% flows, not stocks, but flows. Okay. Back in the 80s, it was doing $200 trillion a year. And imagine how strong the dollar was back in the 80s and 90s, way stronger than now. So $150, $200 trillion a year. Before the global financial crisis, we were up to $750 trillion a year in velocity. It's not actually the definition of velocity, but it's, in flows of value through Fedwire. Fell down after the GFC. 2015 pumped up to 874 trillion. Now, after all the mad money printing that happened in 2020 and more and beyond, we're over $1 quadrillion a year. That is 1,000 trillion worth of base money flows through the Federal Reserve a year. And now the actual number is, as of June 2025, 1.15 quadrillion, 1,158 trillion. It's a lot of money. It's a lot of money that flows every year through FedWire. And FedWire, by the way, is only one base money system. There is the UK has a system. It's called CHAPS. Euro, I forget what Euro is called. It's not Euroclear. That's for securities, but it's something else. Anyway, this is the base money systems. Of course, the Federal Reserve is the biggest. This is going to be the biggest one, but there are others. And so there's a lot of like the plumbing, the deep plumbing of the financial system is right here. It's on this chart. And it's huge. Now, let's look at Bitcoin. What Bitcoin is going to, or what Bitcoin can do and has done over the last, basically since it's been around. I'm going to put it on here now. You probably saw it at the beginning. Could you see it?
Almost the same. Quite the same.
No. It's almost nothing. it's very small.
I saw that. I saw that. I thought that it was the other graphic. Okay.
Yeah. So it's here, and you can see the biggest bump is right here in around 2022, coming down from the top.
Yes. Now I see.
18 trillion. So here we start to see the scale of what banks, major companies, all settle through the central bank each year is $1,000 trillion at the traditional fiat rails versus $18 trillion worth of Bitcoin. Again, I'm not saying Bitcoin can't achieve this. We can see how quickly this power growth can go, but still, if you look at this metric, I think we're going to be it's going to be a while. Now we're even lower, only 7 trillion. Yes. All right, so we have some time. Now I'll put a multiple here on the right chart and put it on log on the right hand axis. Put on log scale. I'll take that off. This is the improvement that we've done. So we used to be 300 million times smaller. Now we're only 157 times smaller. So this is a power curve, by the way. You can see it's a nice slope down. I expect the same. We're a little bit probably behind trend at the moment. I expect this to improve. We were at as good as only 59 here. I mean, the difference is still enormous. You can see it's by the size of the light green shade there. But anyway, this is my long-winded answer of answering you about hyper Bitcoinization. I can get behind the gradually then suddenly meme, but I think gradually is a lot longer than people expect.
Yes, probably again, we are not going to see soon this 1 BTC. But what I think is what you showed in the graphic is we can see that the wealth, the market cap of the companies, the GDP of the countries can be measured in Bitcoin in the future when these numbers become crazy. The numbers in terms of fiat. Right. It's my perspective. It's not backed on science, but yes, it's gonna take time to get the hyper Bitcoinization. So I want to ask a few questions before we quit. I know that I told you 1 hour, but we are a little bit more. But the
it's okay.
chat is super interesting. And in one of your streams, you said that the 4-year cycle are still on. While most of the people, they say that the 4-year cycles are over. Right. With all the new companies. You said that it's not because it's not invalidated yet, but right. What do you think that this is going to happen?
Yeah, I think well, I cannot say for sure we're going to have a boom. I don't have any math to judge that. I really have this sort of, and I will admit, it's kind of like a caveman view of the 4-year cycle. It's just something that I'm not going to invalidate until it's been invalidated. So like I said, let's just put the 90. Well, let's go back to this one. Let's put the 80th and the 90th and go back. we easily hit the 80th. All right, the 80th percentile above trend. That is 1 point. By the way, that should say what it is. It's 1.3x the trend at the time, so it's not that much. 1.3x the trend by the end of the year is only what is it, 160, 170? Yeah, 170K, something like that, 170,000. That is plenty achievable to me. Then it just becomes how much. It's a question of FOMO after that, right? So 250, possible. Again, 3x the trend, 375, probably less likely. The more important point I would just say again, and I already said it, but ask yourself, because I have, when you hear people online saying, I think the 4-year cycle is over, we're going to be on a smooth uptrend, what is the uptrend? Because if they are thinking that it's going to be like exponential growth that matches the stock market or something, that's just not what's happening. So those people don't know what they're talking about, is the point. So you have to be grounded in some math to make those predictions. And look, I'm happy to say for me, like Giovanni has a full model. He does this with the booms, tries to graph them and everything. And I know, people find that interesting, and it is. So definitely check out his channel if you're more curious on all the different maths of how the bubbles or the booms can occur. For me, I'm looking at it very simple. Have we been above these rare air territories in the past every 4 years? The answer is yes. So, having said that again, is we know the model, we know the trend, we know the math. I would be willing to say that the 4-year cycles are over if, say, a year from now or 6 months from now, maybe 9 months from now, we haven't even hit the number 8. We haven't even gotten to like here. Then I would be willing to say, okay, well, that's definitely a different trajectory than these sort of booms and cool down periods than we've had before around the trend line.
Excellent.
But to me,
excellent.
what's the point of invalidating that, or what's the point of invalidating that before it's been invalidated? I have no desire to do that, and the math doesn't show that it will be yet.
Excellent. And the other question is, you said that Bitcoin volatility is not connected with money supply.
That's right. So if you go back to here, well, I would say what I've said before precisely is, if you look at these charts, okay,
Hello?
yeah, I'm here.
You were frozen, yeah.
Okay, sorry. If you look at these charts, okay, and I know my tooltip gets in the way. Let me zoom in. So we have this projection. We could pass gold in 8 years. We could pass all of base money, fiat-based money, in 15, 16 years. That's a lot of time still for the economics of whatever the central banks are going to do to play out. All right. And whether they adopt Bitcoin will affect this, by the way, or not. There's a lot of time to play out there. But in the meantime, and actually I don't have this chart here, but if we just look at, let's look at, say, right here. In August 2025, right now, at end of August 2025, month end, $2 trillion Bitcoin market, $20 trillion gold market. Bitcoin is 10%. All right. $26 trillion fiat-based money market. Bitcoin is less than 10%. You add these two together, which you can do, but you'd have to net a little bit because central banks actually hold some gold. So that's another story. But basically, let's add those two together. Then the Bitcoin ratio falls to like 5%. So if you look at traditional base money in the past, gold and now central bank money, both are right here on this chart. Bitcoin is about 5% of the value. So based on the power curve, based on where we are, I'm saying, because of this math, 95% of what Bitcoin has done in the past and is doing right now today has to do with the curve itself. It only has to do with the endogenous sort of adoption of Bitcoin. It's the price curve itself that's making this happen. It's the network growth itself. Every day more and more users, every day more and more adoption, every day a little bit more and more hash rate. Those things are what is causing 95% of Bitcoin's price. In the future, when we start to get to, when we get, in 10 years, when we're getting all of a sudden to 50-50, by the way, it's not 100%, it's still 50-50. When this reaches the same value as gold will still be 20, where's the projection? Yeah, look at that. Isn't that hilarious? Gold today, the value is 20 trillion, but it's well over trend. And I do think even though Peter Schiff doesn't like that, the trend is only $13 trillion. So actually Bitcoin on a curve, it's projected to pass that same valuation of today for gold. This shows you how, if you look back, 15 years in the case of Bitcoin here, even if you look back 50 years, if you went back to 1971, it wouldn't be that different. Gold seems overvalued based on the trend today. So that's interesting. Anyway, the point is, after 10, 15 years, Bitcoin still will only be 50-50 of those things. All right. So there's just a lot of wrestling to do, a lot of wiggle room of all of these models, of course. But in my view, everything that has happened in the last 15 years of Bitcoin's price action, like 97%, has to do with this curve, which is a really crazy thing if you think about it. It's a crazy idea, but Bitcoin, that's how networks grow. Bitcoin you're looking at the growth of a network when you look at this price chart, and 95% is the growth of the network. In fact, here it was 99% is the growth of the network. It didn't have much to do with electricity or whatever. Of course, those things get factored in to the price, but when you drill down on it, when you lay it out in big picture, we've had 15 years of this price action being at a pretty unbelievable curve. Bitcoin wasn't thinking about what the Federal Reserve's balance sheet was back in 2012. It had nothing to do with it. And I would say even now, 95% of it has nothing to do with whatever Jerome Powell says or Donald Trump says or anybody else. I'd say still 95% of the growth of Bitcoin itself is because of its endogenous network factors, primarily growing on a power curve.
Excellent conclusion to finish the talk. I usually do two more questions. One is, what do you think about the future of Bitcoin? But we talk probably all the episode about the future of Bitcoin. So I will ask the last question, that is, if you had the chance to sit down with Satoshi to have a coffee, what would you ask or say to him, her, or them?
Yeah, wonderful questions. As far as I know, Satoshi doxed himself with the he, maybe not, but I think her is out of the question. I'm not saying that from any sexist point of view. I'm just that's the pronouns that I think were used even respectfully by Satoshi at some point. But anyway, I could be wrong on that. I think that's correct. Then it becomes if it's a man or a group, and I would simply ask, how long were you thinking about the future of a decentralized, durable, digital money? And then what was that catalyst that that gave you that flash in the pan sort of idea? Because it really is, if you look at, again, I'm not a technologist. I've looked at the code. I trying to code more, and this is obviously code here. This is JavaScript, this chart. But if you think about all the layers of complexity that Satoshi had to go through to get to that first idea of really making a durable, decentralized database that would solve that Byzantine general's problem, it's just it's incredible. And I think it's a tremendous gift to humanity, and I would probably say thank you as well, because I feel super lucky to be living, say, now than even 50 years ago when all the gold bugs were getting excited in 1980 when gold was screaming to $850 an ounce for 2 seconds on the COMEX before crashing for 20 years. So we're in a very lucky period to be thinking about and working toward a Bitcoin future.
Yes, I think that we are in a very unique period of history that will be studied in the future because we are in the middle of the change of paradigm. And I agree with you. I think that Satoshi is them. It's a group of people because to dominate, to design or to create Bitcoin, you need to know a lot about coding, a lot about economics, a lot about history, a lot about sociology, a lot about psychology of the people. So I think that all these things together, if it was one person, probably it's a genius or some divine intervention that happened, but we can leave this for another kind of talk and another kind of episode. Matthew, thank you very much for your time. Anything you want to add and how people can contact you?
No, my pleasure, Fernando. Thank you very much for having me. My site is right here. It's porkopolis.io. You can follow it, basemoney.world. There's a bunch of other links as well. I don't really have sponsors or many sponsors often for different stuff. So it's value for value stuff. If people want to donate to my BTC Pay, Lightning Network, on chain, it's great. And also I have a few different charts on the money supply and also things we talked about here where you can see that, like, here's that 12.7% increase in time. It's all on my website where you can verify the math and check it for yourself. So I would just direct people there.
And also you have your X and you have your YouTube channel that is Porkopolis Economics.
Yeah, you can find me. There's a lot of different sort of branding there, but my handle is @1basemoney, at the number 1basemoney on all platforms, Nostr as well.
Excellent, excellent. Again, Matthew, thank you very much for your time. I will leave the episode on loop on our platform so the people can enjoy during when I go to sleep. And I'm gonna be editing a little bit and uploading to our new YouTube channel and our Rumble channel probably on Monday. And of course, on Monday, 4 p.m. Hong Kong time, I will be there watching your show. Thank you very much for your time. It has been a pleasure.
Oh, thank you, Fernando. Pleasure's all mine, and I really appreciate the invite, and good luck with everything you're doing.
Thank you very much, and the same for you. And thank you very much to everyone who is on the other side. If you like the episode, please give us a thumbs up, share, subscribe to our channel, and of course, to Matthew's channel. Share this episode with the people you love. Share this episode with the people you hate, because we must reach 8 billion people to Bitcoin. Stay humble, stay sats, and remember, we are all Satoshi.